Give you a choice. Would you rather make $50,000 quickly or build $500,000 slowly? But here's the catch. Quick gains can also mean quick losses. Sometimes it can happen in just a few days while you're asleep. And yes, today we're talking about stocks versus property. Which is actually the better investment? Recently, with geopolitical tensions in the Middle East, many people are telling me it might be time to buy gold, silver, or volatile assets like Tesla, Nvidia, or ETFs, or even crypto, trying to capture quick gains. And that's the attraction of stocks. Stocks are liquid. You can start small, you can buy today and sell tomorrow. But the trade-off is volatility. Prices can swing 10% or even 20% overnight, and many investors end up riding an emotional roller coaster. Now compare that with property. Property moves slower. You can't just buy today and sell tomorrow. But because of that, prices tend to follow long-term fundamentals like population growth, land supply, and housing demand. That's why we are seeing new launches crossing $2,000, $2,500, and even approaching $3,000 PSF. Just recently, Pinery Residences at Tampines launched and reportedly sold over 90% at around $2,500 PSF. Another major difference is leverage. With property, you can control a much larger asset with about 25% capital. For example, to own a $1 million property, you might only need around $250,000 in cash and CPF, with the bank financing the rest. But if you want a $1 million stock portfolio, you generally need $1 million in liquid capital. And in Singapore today, property is increasingly not just an investment tool. For many families, it's also a fundamental need and long-term store of wealth. Singapore's birth rate is falling, yet to sustain the economy, we continue bringing in new citizens and PR each year, about 70,000 combined annually. And they form part of the housing demand, together with HDB upgraders, which means housing demand remains an important focus. But regardless of whether you choose stocks or property, one principle always remains the same. Protecting your capital is more important than chasing quick gains. Investing should help you hedge against inflation, grow your wealth steadily, and move closer to your long-term retirement goals. So instead of following hype or FOMO, choose the investment that best fits your financial situation and risk appetite. And with everything we discussed today, there really isn't a clear winner. Both stocks and property have their supporters. But if you prefer property, want to use leverage, and ride the next wave shaped by government planning and URA master plans, without losing sleep over daily market volatility, feel free to reach out. I'll be happy to help you navigate the sea of new launches and find one that fits comfortably within your budget and long-term plans. And as always, do like and share this video. I'll see you in the next one. Cheers!